Hey, what's going on, everybody? We're talking Invesco Mortgage Capital, ticker symbol IVR. I have a small position in the company. This is not investment advice. That's a good disclaimer. I have to get that out of the way. So I am looking to either add more to my position or not, but I like to keep up with everything that's going on. So I thought I'd share this research video that I put together. Hopefully you find it educational and entertaining. So as y'all know, I use Seeking Alpha. Have my couple portfolios uploaded to Seeking Alpha, so I get alerts. So what I like to do initially, I'm just kind of going to go over what IVR is and what they're all about. They are a REIT that primarily focuses on investing in, financing, and managing residential and commercial mortgage-backed securities and other mortgage-related assets. It invests in residential mortgage-backed securities, RMBS, and commercial mortgage-backed securities, CMBS, that are guaranteed by a U.S. government agency or federally chartered corporation, that are not issued or guaranteed by a U.S. government agency or federally chartered. Well, you know what? To tell you a little bit more what this company does, let's take a look at a short little video from Investopedia, who I love.
Mortgage-backed securities, or MBS, are a type of bond representing an investment in a pool of real estate loans. To understand what a mortgage-backed security is, we need to go over what happens when a bank issues a mortgage. Let's look at how a mortgage becomes an MBS. Tony wants to buy a house costing $500,000. Usually, Tony would go to his bank and apply for a mortgage for $500,000. And in return for loaning this money, the bank would make Tony pay interest on the loan at, say, 8%. Before the world of mortgage-backed securities, the bank would simply keep this loan on its books and receive principal and interest for the duration of the loan, say 30 years. One downside of this arrangement was that the bank had to keep this loan for 30 years, tying up capital and resources. One day, the bank had an idea. It could sell the stream of interest, the 8%, and principal payments from Tony's loan to investors to get it off the bank's books and free up capital at the same time. The bank would make money simply from originating and servicing the mortgages and from other associated fees. In order to sell the interest streams to investors, the bank bundles Tony's loan together with hundreds, maybe even thousands, of other mortgages. Then the bundle of mortgages is sold to an investment bank in the form of a single bond. The investment bank partitions the pool of loans according to quality and sells the sections to other investors. So although Tony makes payments to his bank, the loan is actually in the hands of investors. Mortgage-backed securities are essentially a way for banks to free up capital and provide a way for investors to buy into mortgages.
So yeah, that's how my head feels after all that information. But if you are all caught up, let's jump into another article from Seeking Alpha. The average homebuyer may see mortgage rates rise as much as a quarter point on a 30-year fixed rate mortgage. Matthew Graham, COO of Mortgage News Daily, told CNBC. Mortgage rates roughly follow the 10-year Treasury, and today the bond sell-off accelerated, pushing the 10-year Treasury up 11 base points to 0.94%, its highest since March 20th. I expect mortgage lenders will price more aggressively as refinance volume tails off in response to even slightly higher mortgage rates, said Mike Frantantoni, chief economist at the Mortgage Bankers Association. For now, the news looks good for mortgage REITs, i.e. IVR, along with a few others there. Still, markets can swing in a blink of an eye. Things can change, but until and unless they do, you have to treat last week's all-time low as the bottom of the market. Let's take a look at another article from CNN Business, the stock price forecast for IVR. The four analysts offering 12-month price forecast for Invesco Mortgage Capital have a median target of 225 with a high estimate of 19 and a low estimate of 2. So just taking a look at that chart, I mean, there's definitely room to run there. So, you know, I feel strong about my current position. So if that's any indication of what the future can hold, you know, if it gets a little bit lower, okay. But you know, as to where it can go, that's a little bit more promising. So jumping into the chart, let's look at last week's 5-day chart. And bear with me, my technical analysis skills are very limited at that, at best. So I'm just going to highlight the levels of support here, and we're just going to notice a pattern of ascension. It made a pretty good jump from the low to mid threes all the way up to the low fours toward the end of the week. So, I mean, that was pretty promising, especially for my position. I got in on the high twos, so definitely room to run. As I said, again, there's just a cool pattern that I'm seeing, that I'm noticing. That pattern is a stair-stepping type of pattern where the price is definitely going up with a small pullback toward the end of the week. So I am bullish on IVR, and I definitely hope to see if there is a bit of a pullback, then perhaps I'll add to my position, and if not, then let it ride out and see where it goes. But I'm not expecting anything to happen very sudden or anything like that, but we don't know, anything can happen, right? So I feel that it's always good to be prepared. And the cool thing I like about Seeking Alpha linked up to my portfolio is that I definitely get all the updates, news articles from all of their authors and the people who put out their content, which I like them. Yeah, I'm gonna highlight here with the pink, just a little bit of that uptick in volume in trading as to what was responsible from getting the price from the threes to the fours. So definitely uptick in trading volume. Now we're going to take a quick look in comparison between IVR and CMBS. CMBS is an index fund that is ran by BlackRock. And if we just take a look at, even the 3-month, the 6-month, the year-to-date, all the different time frames between the two, and we just notice that CMBS barely moved during the downturn, and IVR not just went to the bottom, it retested that bottom during this time frame that we're looking at. But this video is being made Sunday, June 7th. Monday, June 8th, the market's going to open up in a few hours, so who knows what will happen. But I just wanted to show the comparison between an index fund and a single stock. So, a lot of people and a lot of the things that I read and watch will tell you just buy an index fund. It's safer, or it can be. It has the potential to have a little bit more stability in its price, so you know what you're getting. But there's a lot more holdings, right, in CMBS that kind of keep it stable. But I just thought I would share that in my research. It kind of, allows me to prepare for whatever I'm about to get into with a company like IVR. And I'll leave it here. I always try to finish the videos with the website of the company that I am researching. And I just thought that it was pretty cool how IVR is very transparent with their dividends, their press releases, all of their information. I like this stuff. And so I'll leave it here. I hope you'll have a good week. And if there's a company that you would like me to go over, send me a message or leave it in the comment section. But until the next time, y'all take care of yourselves and take care of each other.